Good afternoon, everyone. This is Bill Fairman with Carolina Capital Management. Thank you so much for joining us. I am pulling an audible. This is one of the beauties of live broadcast is that sometimes you have to change things. We will have the beauty of the numbers on uh, construction and fix and flip on another upcoming show. But I've got some really interesting stuff to bring you right after this. And thanks again for joining us on the Real Estate Investors Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell. And most importantly, Wednesday with Wendy. Sometimes there's way too many W's in that announcement. But Wendy donates 30 minutes per person on Wednesdays for anyone who would like to discuss real estate, any part of real estate that you like. Go ahead and sign up. The uh, link is in the comment section. She's usually booked out a couple of months in advance. And the comment section is going to be either on your right side of your screen or underneath, depending on the platform that you're viewing us from. Also, I'd like to talk about the Wise Women Expo that's coming up on October the 22nd. Yeah, so Wendy's portion of the expo is going to be devoted to short-term rentals, but there's a great lineup of very smart people in real estate. I'm assuming the vast majority of them are going to be women, and they're going to cover all segments of real estate investing. So go ahead and use that link to get signed up, and it's all going to be virtual. Okay. So if you're wondering what happened, it's a supply chain issue. we've been railing about supply chain issues gumming up the works in our economy, and it's hit home. So both Wendy and Jonathan are the ones that are qualified to talk about the beauty of the numbers, as I'm the one that raises the capital. And so my supply chain got messed up because they can't be here. So we're going to cover some other topics that I know are going to be valuable to you. Let's get started with our breaking news, if you don't mind. So conventional mortgage rates for owner-occupied purchases or refinances have really hit a low point. I can't say it's an all-time low, but it's pretty low. You're still under 3% on a 30-year fixed rate mortgage. I just saw some rental property, long-term rental properties at right at three and a quarter. That's unbelievable. So 15-year, 2.23%. That is unbelievably low. Let's talk about inflation. The CPI numbers came out yesterday, which is the Consumer Price Index, how much more we're paying for our goods and services. Year over year, uh, up 5.4%. So if you're wondering why your dollar isn't going as far as it used to, well, there's a key. 5% up from last year. The producer price index, and this is going to get you thinking about what's coming up. The producer price index went up 8.2%, which means obviously that they're going to pass those costs on to the consumers going forward. So it's not looking good unless they're going to eat 3% of this themselves, which most companies aren't going to. Some are, but most aren't. First time unemployment claims came in under 300,000. They were like 260 something thousand, which is a pre-pandemic or post-pandemic low. And then continuing claims 2.6 million, which is also a low. It's interesting though that we still have 10 million open employment positions available, yet we have 2.6 million people that are still on unemployment, which is a lot better than it was. Hopefully, we can get some more people back into the workforce because that's a big issue right now. Supply chains, we've got all these vessels, all these cargo ships that are stuck at your big major ports, floating off, off the docks because they can't get enough people to unload them. And then when they do get enough people to unload them, they don't have the trucks to carry them out to where they need to go. So that's becoming an issue. You have Target, Walmart, a few others have decided that they're going to charter their own ships, bring those in, but they're still going to have a problem with trucks unless they own their own trucks. How are they going to get them to their stores? So that's going to be an issue for a while. It's something that should have been addressed earlier on. The problem with most government functions is they put these committees together to figure out how to do it. And then by the time they figure it out, business has already done it. So I'm not bitter, as you can tell, right? I have a friend of mine in Collective Genius that has been doing a weekly news for savvy real estate investors. He's been doing a little publication. It's like a electronic publication. Sheree, would you mind putting up the REI? There you go. So that's the link. And there's typically, you can get in there and subscribe for this thing. I highly recommend it. Daniel is I just call him a data geek. He loves data. So he's always looking at data and trying to figure out a way to put the data to work or find some kind of good use for it. And he's done that by compiling different articles that he searches and putting them together in a nice, neat weekly electronic newsletter for real estate investors. So for give you an example, richest people in real estate, and then another headline is a startup city, Redfin mortgage rates, best places to flip, and then of course something that all real estate investors want to know about are Crocs. Yes, the shoes. I gotta read this or read to you this thing about the Crocs. It is so funny. Of course, I'm not going to be able to do it now because my computer is not working great. But part of that article said that Crocs used to be 100% guarantee birth control because they were so ugly. Anybody that wore them wasn't going to meet anyone from the opposite sex. And now they're like a $10 billion industry. These plastic Crocs. There's all kind of different designs and Crocs that are coming out. But they have a good article in there about the Forbes magazine that came out with the richest people in real estate. a few of them are going to be household names like Warren Buffett. You know, he does a lot of real estate investing. The CEO of BlackRock. Most of them are fund private placement and uh, publicly traded fund managers in real estate. A whole bunch of them are people that are in the service industry, Home Depot, a few others. But that's going to be very interesting. They have a city in excuse me in Honduras that is some folks in Silicon Valley have put together. It's they call it a libertarian city where government is there just to be what it's supposed to be: safety, roads, bridges, infrastructure, and then everything else you're kind of on your own. We'll see how that goes. And then the best places to flip, um, fix and flip, and the worst. So it's interesting that North and South Carolina are on that list. So we have Raleigh, North Carolina, and Columbia, South Carolina are two of the best places in the country. There was only like uh, 5 or 6 that were listed in each category. Uh, Raleigh was in there, and so was, like I said, Columbia, South Carolina, for the best places to flip. What I found really surprising is a couple of the worst places to flip was Chattanooga, Tennessee, and Charleston, South Carolina. All of those are basically located in the same general vicinity, but either you can't buy these places at a low enough price to make it work, um, or the market's softening up. I'll have to do a little bit more research, but I suggest you guys subscribe to this newsletter. Again, it's a weekly thing. I think you'll get a lot out of it. Some other data that I want to discuss with you as well is that Zillow did a survey on home sellers trying to figure out what was their motivation to sell, and 35% of the people surveyed said it was working from home is what motivated them to sell. And obviously, in my mind, it's people that were in really high, expensive areas that they could sell those homes and get a good profit for them, and then move to a place that's going to be cheaper to live in if they were able to work from home. What was surprising is that the largest concentration of sellers were in the South. So 41% of all sellers nationwide were in the South. Now, does that mean they were selling uh, because they want to move out? I think they're selling because their properties went up in value so much, and that they're able to make a lateral move, still stay in the same place. And with low interest rates that we have, they're able to uh, buy a much bigger house with the money that they made on that. So that's my opinion. Um, I'm sure everyone else has a different one. Shroob, let's go to our ugly question of the day. Okay, so actually, I have 2 questions. I hope I can get to both of them. So, in my opinion, I'm assuming that's what that meant because it says in your opinion, the best strategy to invest in real estate to maximize returns, what is it? And then, is it buy and hold with interest rates being so low, or fix and flip for profits, new or experienced investors? That's an awesome question. And I'm going to have to give you that attorney answer. It all depends. It depends on what you're looking for. If you need what Walter Walford always called eat money, and that's if you need money right away, fix and flip is your best strategy, because that's going to give you your highest profits right now. The problem with fix and flip is you're only as good as your last deal. If you're investing long term and you want a little bit less active returns, you can do long-term rental. You're right, the interest rates are low. They're going to continue to get lower. We've already discussed this on previous shows, where if you got a 30-year fixed mortgage and you have really low rates, you're paying today's dollars far into the future. And we know that especially based on these inflation numbers I'm giving you, that dollar isn't going to be worth as much 10 years from now as it is now, but you're getting ready, you're able to pay it over time with cheaper dollars. At the same time, those properties are going to continue to go up in value. So not only do you have the cash flow, so if you look at it from a stock market perspective, where you have a stock that pays dividends and at the same time goes up in value. So you have the capital gain that you can get long term, and then you've got the cash flow throughout the investment life as well. You can do the same thing by investing in funds that are doing similar things. That would be totally passive. You're not really owning the property. If you're investing in mortgage funds or note funds, you just have the lien on the properties. If you're investing in funds that own property, obviously you're getting the advantage of a capital gain over time, but you may or may not get as much cash flow or income along the way. So again, it just depends on where you are. If you need the money right away, fixing and flipping is the best way to go. I always tell people, if you start off fixing and flipping, you start becoming successful at it, you need to take, one or two houses a year out of what you're doing if you can. It depends on how many you're doing. But take one house a year when you're getting started, and dedicate that one to do a long-term rental on. And over time, you can start building up that portfolio. If you haven't heard of dollar cost averaging in the stock market, that's a great way to do it. Yes, properties values will go up over time. It'll cost you a little bit more to get into them, but you're averaging it over time. And people always need a place to live. So single family housing to me is the best route to go until you get into a position where you can start doing, maybe some multifamily and self-storage. You're always looking for cash flow for the long term. That appreciation shouldn't be a motivator when you're doing cash flow properties, but it is going to happen over time. Some areas it's going to happen quicker than others, but over time you're going to get appreciation. Okay. What's our next question? If we lose the fight in the congressional reconciliation legislation, will accredited investors have to stop investing in real estate funds like yours? Well, based on this question, the way it's asked, the answer is no, because the legislation only affects IRA investments. So if you're an accredited investor and you're using cash, it's not going to affect you at all. You can still continue to do that. This bill has to do with IRA investments only. And part of this, they do not want IRA investors to invest in anything where they have to be certified or accredited, or small ownerships in businesses, because it's not just about the accredited investors. They're not going to allow you to have more than 10% ownership in a business, period, because you could take your IRA and you can invest it in a business as long as you're not, as long as you have no management capabilities or responsibilities within the company, you can't invest in the company. That said, even if you're not accredited, they're not going to allow you to invest in a company um, and have more than 10% invested in that company. So it's, again, the legislation only deals with IRA investors. And we've got till probably October 30th before we know for sure whether that's going to go through or not this particular session. And it doesn't look like it's going to happen, but you know what? They've got IRAs on their radar. And I think we said this in previous shows. Make sure you contact your Congress people, let them know, keep your hands off our IRAs. Once they have it on the radar, it's there for a reason. It's on the radar for a reason. And it bothers me that it's on there at all. Now, let's assume you were talking about IRA investments. There's other ways to do it. Funds like ours, we can pivot. It'll cost us money, but we can always pivot to it's called a Regulation A+ fund. It's more costly, and that's the downside. If we all have to convert or start Regulation A fund or a Regulation A+ fund, it's going to cost all of us a lot more money to do so, which means your returns are going to be less because the cost of administration in those types of funds are a lot higher. There's a lot more reporting. You have to pay a lot higher legal fees, and your fund administrator is going to charge a lot more. But the good news is you can take non-accredited investors, and you can take investments as low as $1,000 if you want. Most fund managers in small balance real estate do not like to get into those types of funds because obviously it's much harder to manage, and what they're looking for is to manage the real estate project, not spending as much time managing the fund itself. And that's what you want. I mean, you want competent fund managers, don't get me wrong, and they're paying attention to the fund. But the most important part of the fund is what the fund is invested in. And that's where they need to spend the vast majority of their time, is evaluating the deals that you are going to be investing in. And if it now becomes, I like to call it mental gymnastics to get in a fund that allows you to get in there with your IRA, it's not doing anything but costing everybody more money, more headaches, but it can be done. So all is not lost if this goes through. We're just going to have to make changes. And as what happens with most legislation, they always leave things open for people to work around. But I find it saddening that we have to go through all these mental gymnastics to figure out how to do what we've always done. They just throw more roadblocks in front of you. That's another thing I love about government. They're so efficient. Okay, I have rambled on now for almost 30 minutes. I know you guys can't see, but I can see Sharub in the background. She's already yawning because she's getting a little bored with me, and now she's laughing. All right, folks, please don't forget to register for the Wise Women event, Wise Women Expo. It's October the 22nd through the 23rd, Wise Women Expo. Again, great lineup of speakers. Register for it. Don't forget, you'll regret it if you don't sign up. It's not that expensive. You'll get a ton of great content out of it. So thanks again, guys. I appreciate you joining us on the what is the name of our show? The Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We're lenders in the Southeast for real estate investors. If you're interested in borrowing money, go to carolinahardmoney.com. Click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and sign up for Wednesday with Wendy. Again, I want to add that she's always booked out a couple of months in advance. You can click on in the chat her calendar link to get on 30 minutes. Anything you want to talk about real estate with Wendy. Our next show coming up is with Fuquan Bile. He is a good friend of ours in Collective Genius and in Freedom Founders. Fuquan does a couple of things very well. One of them is notes. He's in the note space, and he also does some fix and flip and long-term rentals. He is out of the New Jersey area. He's got a lot of great things to say, and we're going to talk about numbers with getting into the note space. Now, Fuquan does a lot of non-performing seconds, which people would think are risky, but they're actually, if you get them at the right price, they're actually great leverage to have. So see you guys on the next show. Thanks for joining us.